Podcast is present.
So we are recording. All right, so we're just gonna go ahead and, I don't think anybody, maybe, okay, so we have Ozzy here. Doesn't look like we have any of the new people on, so. Other than Matt Papes, which I believe is Matt in the Discord. So I don't think he's ever done a Zoom with us. So feel free to jump in if you're new.
New also.
Yeah. Questions or whatever it is, just stop me at any time. I'm not gonna. I mean, I could go over the options chain with you guys and the delta and stuff like that, but I'll do that for a day when I have a more comfortable position, because I'm sitting on the floor, and that takes a little bit more time. We'll just go over SPY and the trend lines or whatever, and what happened Friday. So, kind of sucks what happened on Friday, where we held and the thing just did not bounce at all. Powell kind of changed his tone and pretty much just acknowledged that he's been lollygagging this whole time, and instead of telling the truth, and so the market could have bottomed when it should have bottomed a long time ago, instead of trying to, I don't know what he was trying to do or accomplish back then, but it is what it's what happened on Friday. They just dumped the market pretty much. So this is the 1 minute chart here. Trend lines, you can see kind of why they matter, right? You can see the market usually bounces around those trend lines, or you have resistance or support levels, right? So you can see all these lines just going all the way back. Couple of days, right? Triangles. If you extend your lines, normally you'll see why when you extend them, how they connect, right? For example, this line here, this could be a little bit adjusted, right? I can extend it all the way. You'll see once you start, right? So just look, once I extend it at this peak, and I'm going to drag it all the way up. You see how it connects up here, right? So everything connects. There's your trend lines, and you see, so you touch it to that peak right there. That's exactly where it goes. See resistance here that lines up with your horizontal line right there. And you get resistance right here and resistance right here. Now, if we go ahead and extend it all the way over, we're going to see where it goes. All right, so extend it all the way over. Now, right here, once you broke here, you short, you take puts. Right here, it rejects, you take puts. Now, let's go all the way over. Let's extend this line all the way. All right, this is from a couple days ago, right? So just showing you something with this trend line right here. So there we are. And adjust it a little bit. Bringing down at the peak. Right. So that's about right there. Now we're gonna go ahead and actually let's change over. That's a 1 minute. Let's change to the 5 minute. All right, so well, we just drew that's this line right here, right? That's on the 5 minute all the way up. So normally, if you have a trend line on the outer side, you're gonna have a channel as well on the inner side. So now you have to go ahead and find your channel. So there's a channel in here. You can see where the points start to connect. Let's see, drawing tools here. I haven't used this. All right, so kind of looking here, you start to get and we will, all right, so, all right. Start to get you can put it right here, right? You can see that's your uptrend channel right there, shorted inside of the channel, and then eventually cracked right here. So once it cracked there, you would take some puts. You can see once it cracked, right, you draw onto the line where it cracked, right? That right there, that is going to be resistance. So going forward, SPY is going to have resistance at 430.53 because you see we double topped right here. That's how you find your lines. So just look for your double tops, right? So you see when it broke below, it came down, right? Or bounced off some support down here. You can see a double bottom here, a little bit of support. Bounced, came back up, rejected right there, right? And then gap down. And here again, you see rejection. Usually rejection is going to come from either a double bottom. So if you draw a line right here, kind of have some resistance here. Rejected. And every time it trades outside of a channel, you take puts. Every time it goes outside of a channel that's symmetrical, right? So your channels, they should be symmetrical. This line and this line, it shouldn't be like that, right? You can see how it's not even. It should be symmetrical, equal distance from both sides, both angles. So like right there. And normally the chart will have it set up for you where it's going to be equal. When you look at it, you'll know where it's equal. So once it breaks outside of the channel, that is where you take your puts. Now, if we look at this channel here, right, I can redraw it just a little bit better, but it's fine. All right, so right about there, right? So we connect this peak right here where it bounced. We connect it here to this wick. And sometimes you can cut out the wicks. Sometimes the wicks, they'll kind of mess up your trend line. So you could cut them out and take it at the bottom of the candle. But in this case, this wick lined up perfectly with this wick, right? And you can see that is your channel right there. Now this should come down a little bit. We're gonna take this from right there, right? So we're gonna run it on top of the candle right there. This goes right there. So look at what happened on Friday. This is Friday, right? So every time it was out of this channel right here, it was just puts. You can see, so this thing just got completely destroyed on Friday. After this sell-off here, and then this bounce here, I guess he changed his tone right here. You had this this gravestone doji right here. This candle, it's called a gravestone doji. So after that, you have this followed by a almost a flat top red candle. So let's change the candles here to Heiken Ashi. So regular candles, right? You can use. I like regular candles more than Heiken Ashi. I used to like Heiken Ashi candles more.
I'll get a burrito with the beans on the side, please. Yeah, that'll work. Right. Thank you.
So regular candles, they open, close a little bit faster than Heiken Ashi. All right, somebody has some background noise here. Okay, so Heiken Ashi candles, those are Japanese candles. You can change them in your broker. You can see here in Webull, you have candle, which are regular candles. And then you have Heiken Ashi. Heiken Ashi, that's a Japanese candles. So when I change it, you're gonna see, you can use both of them, but right, so Heiken Ashi candles, whenever you see just a bunch of flat top red candles, right? It's just flat top red candles after flat top. Just hold your puts and take puts and take puts. You can see you have that gravestone doji here, right? But look in your Heiken Ashi, it's green. But then when you look in your regular candles, it's gonna be red, right? So that right there's a gravestone doji followed by a flat top red candle. So now we'll switch it again, right? And you can see here when SPY started to bounce, and we got rejected here at 413.48 resistance. You formed another gravestone doji followed by a flat top red candle, right? And you can see every single time that happens, you're going to go all the way down. So you can switch between your candles to see the difference. Here again, you have the same doji, flat top red candle, and this thing just got completely walked all the way down. It was just, there was basically no green. It was, just got slammed all the way down. A trend line, you could draw a trend line from up here, all right, at the top. I'm not going to try and draw it perfect, but
but these potential consequences already been
right about here. If you wanted one that's, what's going on with this thing? Come on.
taking a look at full scope of all these investigations.
All right, so right about, whoa, okay, I see. So pretty much right there, right? As long as by, it held below this trend line here, it was just dead for the day. And I took the 49 puts and I got stopped out. Right, I took it right around here and it came down here and I was up about 30%. As soon as I put my stop loss in, I got stopped out with these candles right here. I probably should have held, and it just got walked all the way down. You can see it came right down here to support down here 405. So just keep your horizontal lines on there whenever you have them. So every time it trades out of the channel, you want to take puts, right? So if it's inside of the channel, you want to just buy calls. And you can see this is what happened on Thursday, right? We had calls and we were up and we broke out of the channel. You had a beautiful cup and handle right here. We had a cup and we had a little mini handle right here, and then it went up. So calls was really, really looking good, and it was really the play. You can see that cup was starting to form a lot bigger right here. So if we zoom out, right, you can see that cup here on the 5-minute, and it started to form, and he changed his tone. So the market could have went either way. If his tone was good, we would be all the way up here, this area up here, 425.26, right? But it just never went the way that I would have liked it to go for us. So
Here you go.
how do I delete all the lines on Webull with one click? Does anybody know? So we're gonna redraw all these trend lines.
What you trying to do, Zero?
Oh, delete all. Okay,
Yeah, I'll just
there we go. All right, so we're gonna go to the daily. Let me get as comfortable as I can. So we're gonna go to the daily first. So the first thing we're gonna do is recognize the patterns on the daily chart. I'll change back to regular candles. So I usually have 2 charts up, Heikin Ashi candles, and then regular candles. You won't find the gaps. When we say gaps to fill, you won't find those with Heikin Ashi candles, right? So if you look, you're not gonna find the gaps on the chart. You need to be with regular candles to find the gaps. You can see there are gaps now in between the candles. So this is what we say when we say SPY has a gap to fill in the chart, because all these gaps, they need to be closed. You can see right here, you had a gap here at 399 down to 393. And then you see we came down, and this candle is here. They filled the gap here at 399. So at a gap right there. Now we're gonna go ahead and look for that head and shoulder pattern, right? So we know head and shoulder, everybody should know. You could just Google it and you'll see what it looks like, right? So I'll go ahead and draw it. I think there's some drawing tools here. We will draw it. So yeah, the rectangle. I guess they changed the drawing tools and how it works. Okay.
It can go from 0 to 500 degrees in under 1 second. More than it cooks 3 different ingredients at the same time.
Here. All right. So
Your steaks are ready.
see that
Chicken.
head and shoulder pattern, right? So this is your head, your left shoulder, and your right shoulder. So what has to happen is that it has to break the neckline for this pattern to work, and you can see this right here would be your neckline, right around 412, somewhere around here, 411. Or you could say 410, right? That would be your neckline. And you can see this huge bearish engulfing candle, right, on Friday, and they completely cracked, every single support level that you had anywhere in here, just completely destroyed everything. The thing as well is that the market went up on really light volume, right? We rallied on light volume. So whenever a sell-off is going to happen, it's going to be pretty, devastating, like we saw on Friday, where you dropped $16 in one day. And the selling was, just a lot of selling, because you can see it's down $1.46 in after hours. So SPY's down to 403, somewhere around there. There's just a lot of selling. If you look normally, right, look at the volume over here. Just look at this area right here to about maybe here, right? Look at the volume here. Just look at the candles, the height of the candles, compared to this rally here that you had from July. You can see the difference, right? So about here is the average volume in July, right? Look at this over here. You had volume, a lot of volume here, so the market was a lot stronger. So when you sell off, you have a lot more support, right? And you have that resistance to the selling. But when you rally on light volume, a sell off like this is gonna wipe pretty much a lot of the gains out. You dropped 4% in one day, and it took the market 6 weeks to rally maybe 12% from the bottom, I think it was, right? And then it dropped 4% in one day. So it's another thing to look at. So that's a head and shoulder pattern playing out right there. Let's see here. All right, so trend lines. We're going to draw some trend lines here on the daily. So first we had a high up here, right? Oh, it just doesn't let me drag it, right? So right there. So you see, if we had crossed this right here, 433, we likely would have come all the way up here to 440s and started to push up, but this never happened. So horizontal line. So we know that we have a top here at 431, SPY made. You want to go ahead and draw your horizontal line right there. So that way, whenever we come back up here, that if we break above here, we're going to start to push up towards in the 440s. First, you're going to push up to the first level of resistance, which is going to be right around here, 437.70, the height of this candle right here, right? You can see a double top right here. So go ahead, horizontal line right here. Then we are going to have, you have a double top right here, right? So this is just the key areas. You're going to find your double top. It's going to be double top or triple top or double bottom, triple bottom. You can see this right here. You had a bottom, this bounce. So when we sold off from up here, this double top, you had, so double top here, sold off down here, and it bounced, right? This bounce lines up with what? This high right here, where we went up to 430 and we pulled back because you ran into resistance. So it had support here. Support when you're below it is resistance. And resistance when you're above it is going to become support. So if we came up above, this line is going to now act as support when you're going back down. So how do we find support for SPY, right? So we're down here to 403. What are we going to look for, right? Right there, if you look, you have what? You have a right there. That's going to be your next support level, which is 402 pretty much. I mean, there's some other support in here, like maybe right here. You can find a little bit right here, right? Around 404 something, but it's already on the 404. So 402, 401.99 is going to be your next support level. So normally what happens, right, is that if you are going up let's say we're starting to push up above this resistance here at 427.80. The market, this is how the market moves and how traders move the market. They're going to push it towards the next gap. So all these lines that you have here, they're going to push it towards that. That's just how the market moves. If you get above this, it's going to push towards that. That's going to be your first price target. If you get above this, it's going to push towards this because that is the momentum or the trend of the market currently. When you're here, it's going to push towards this gap here, right? It's going to keep pushing towards that level. That's just how it is. That's how the algorithms are going to recognize everything. Where else do we have? See if we could find some more resistance in here. All right, so right, so we're gonna have some support right here. It's not hard to find your support levels, right? Just look for your double bottoms and your double top and where it bounces, right? So right there. So after 402 breaks, right, we could come all the way down to 397. Then that's going to be your next support level. So if the market goes under 400, you could take puts because it's likely going to go down to 397. And after 397, you're going to have some support here at 389. But that's you're going to have little support in between that as well, on like a smaller time frame, right? But if you're going to play long-term puts, then like a week or two out, then that's going to be your target. Your target is going to be the bigger gap downs, not the smaller areas on your smaller time frames. Like if you go on your 1 hour, 2 hour, you'll find the double tops or double bottoms in there that are closer to the price of where the stock is trading at. But normally, once it breaks here, you're going to look for about like a $5 or $6 downside for your ultimate target. So those are your horizontals, and these you could set in your broker where it populates on your smaller time frame as well. So on your 5-minute or your 10-minute, whatever you use, you can have these lines populate from your daily to those time frames, so you don't have to redraw them in all time frames.
Shift in there, diplomatic
As far as trend line goes from the bottom that we had, we have a right about here, right? So you just connect the dots. So right here at this bottom, right? You connect it about right here. And you can see when you zoom out, we're starting to trade inside this triangle, right? And what happens when you trade in a triangle, if you, has everyone watched the patterns video with Cousin Eddie? If you haven't, it's okay. But there's a key thing in there, right? When you trade inside triangles, if you go early, like we see here, and I should have recognized this on SPY, but it's harder to do it on my phone. I just didn't have my computer. When you trade in a triangle, right? This has to trade towards here to the peak. If it trades here and try to go here, it's going to be rejected. Always. Nine times out of 10 or 10 out of 10. If you break early, it's going to go, it may go, but it's going to come right back down inside of this triangle. It has to trade towards the peak right here. And then, so it's a consolidation pattern. You trade in here, all the way in till you get to the very peak. Then what it does in here, it's gathering energy. Pretty sure you can recognize that where he said in the video, if you did watch it. Talked about gathering energy. So you gather energy in here. So when you break out of here, it's a lot of momentum and then you push higher. But in this case, it went too early. And I'll show you on the smaller time frames where a lot of times we went too early. And here's another trend line here, right? So you'll see what I'm saying, right? So here you did come in just a little bit closer to the peak. So you had a little bit of a breakout, but it's the same thing because this did not go in the peak. We are coming right back down, right? So it has to go in the peak for it to for the momentum to continue. Let's see if we could find an example here on the daily where it actually traded into the peak.
One on the 5 minute from the 18th.
From the 18th, let's see.
From the 18th. Is that one I sent you the other day with the orange?
Okay. Let me check the 18th.
Yeah, I'm pretty sure. Let me make sure I can pull it up real quick. Oh, it logged me out. What the-
Okay, I'm on the 18th here. Let's see. Oh, I'm on July 18th. Wow. Okay, let's go back here. So let's go to the 18th. I think I had one too when I said in the chat that if SPY breaks out, it's going to be a fake out because it was not trading towards the peak of the triangle.
It was intraday on the 16th as a
In-
ascending
And
was symmetrical.
kind of have one here on the 15th as well. So let's see. So right there. So you kind of have one right there on the 15th, right? You can see as soon as you come to the peak, that momentum is going to continue, right? You pushed up from 425 to 431. If it went early here, it's going to go up. It's going to come right back down. It has to trade. So you're going to have first test, which is going to be boom, down, up, down. Well, I'll move it. So it's going to be up, right? First test of the triangle. It's going to fail. It's going to come down. Normally, sometimes it'll come down here and touch this line here, but it doesn't have to. It's going to go again. It's going to get rejected. It's going to come down. The third try, the fourth try, it could have came down one more time and then go here. So what you do is you take a call in here because it's in a triangle, so it looks more bullish than bearish. You take a call in here. Your stop loss for your put below this trend line. So your stop loss, or it's either at this wick right here, or a wick down. So that would be your stop loss, because if it doesn't go, it's going to break below. So you take an entry here inside the triangle, and your stop loss is right below this wick right here. Head and shoulder patterns, right? You can see one right here. They don't always play out, right? So we had one here, and just didn't play out, right? You had a head here, left shoulder, right shoulder, and it didn't play out. But you did have a gap down here with futures, so I guess you could probably kind of say it played out in the end. But you had one there, it just didn't play out. So yeah, so on the 15th, you had one right there. So that's how you trade symmetrical triangles. Every time the market breaks out, it's going to trade inside of a triangle. It's not going to break out unless it trades inside of a triangle or break down, either or. So SPY 5 minute high here. Let's see. Right about here. So from there, you're going to run this trend line right here. All right, just connect the dots, connect right here, connect it. Then we're going to zoom all the way down. Right about there. We're going to connect that right there. Now you're going to see, right? You see where it bounced, kind of bounced right here on that line right there. Right? It doesn't have to bounce perfectly, but your trend line kind of tell you. You see bounce right here, right? And then here, and you can see rejected right here. It's not coincidence that this happens, right? That's what your trend line is telling you, that this is going to get rejected, right? There's resistance, descent and resistance from all the way up here. That's what it's telling you. That is descent and resistance all the way. It's following the trend line all the way down. And you can see what's going to happen going forward if you're using your 5 minute. When we go under, you do not take calls until long-term calls, that is, you can scalp, but you do not take calls until this trend line is crossed, but with, you know, with some kind of bullish momentum. So if we go a little bit on the 15-minute, now we can start to pull this line all the way down. So the goal is to pull it all the way down. And SPY is going to trade below this line right here, right? So you do not take long-term calls on anything that's going to move with the SPY until it gets back above this line here. That is descending resistance. That's what it is, descending resistance. So you can see the head and shoulder clearly there on the 5-minute chart, the 15-minute chart. And, you know, it, you know, broke down, right? Broke that neckline and it went all the way down, just how it is. So what's the next support level, right? We zoom out, you can see that line right there, right here. It's going to be some support. So this right here, this could go, I know it could go up a little bit, but it's fine. So that's coming from the daily chart, and that's going to act as support. So you're going to have some support from this line here as well at 403, about 403.90. I think SPY closed at what? 40, and after hours it's at 403 something. So I don't know if it's down here exactly. How do I put after hours on? Is it on after hours? And let's see. No, it's at 405.25 extended.
To the bottom right. Yeah.
Right there. So that's extended hours right there. Now we'll go back. We'll have to zoom out. So okay, so I think they erased my line or something. I mean, that's fine. Weird. Okay, I don't know what it did, but we'll go back. Oh crap! I have to redraw that. But anyways, yeah, that's just your descending resistance right there, right? So as long as it stays below there, puts are going to be in play, and you know, it's kind of unfortunate that we had calls and then, you know, just changes tone and pretty much just a market needed to hear. So now we're gonna find, you know, we could find a channel that, you know, the market was going up in a channel, right? So if you guys could see it, more experienced guys that have been here for a while, you can see that channel already, right? So I don't like the drawing tools on Webull, but okay. Right, there you go. So that is your channel right there. So you can see here, you traded and traded inside this channel right here. Market progressively went higher and higher, right? Traded, broke out. This is why we took calls, right? This is what I was looking at when we took calls. You know, we broke out of the channel, you started having that momentum, right? And you just got to follow the momentum. And, you know, we went up, took calls, and then we took some puts somewhere up here. And then, you know, we got trapped in calls, right? So broke out of the channel. So the market came down, and it came down inside the channel again. So normally what this is doing is it's making higher lows, right? So you have some low here, right? And then you have this low here. So overall, the market is making higher and higher lows. But if we come right back down here to 390, you know, it's going to negate this low. It's going to test this low right here. So higher low. You would like for the market to come down and bounce and then reclaim this channel here and then eventually push higher. But if it doesn't, it's going to come right down here and it's going to test that 390 area, or it's going to test the 50 50-day moving average, which is probably, what is a 50-day moving average? Let's see. I could look on my phone, but let's see if we can set it up on here. 50-day moving average indicators. VWAP, what is VWAP? So you can see VWAP there on the daily. That did VWAP. Moving average. So look over here. So I'm going to remove moving average 5. I'm going to put introduction. No, okay, it's going to be length is going to be 50. Okay, there's already a 120. All right, so we're gonna put the 100-day moving average on there, the 50-day moving average, the 200, and I don't want the 120. 110 is fine. So let's see, the 50 is what color? 50 is orange. So let's go on the daily here. Right. So we can see the 50-day moving average is at 398.46. Right. So 398.46 is the 50-day moving average. And the 100-day moving average is 408. And then you have the 200-day moving average at 427.58. So the 200-day moving average, that is the strongest, that is the most important moving average in the entire market. When you are below the 200-day moving average, the market is completely bearish. When you are above it, you are bullish. So you can see the market has been above the 200-day moving average since where? Right after COVID, pretty much. You can see when COVID happened, we went below the 200-day moving average and it completely recovered. We've been riding above the 200-day moving average this entire time. And then in, where is it? Then in March, right? You see all these EMA, these moving averages, the 100 and the 50, they crossed below the 200. That was your death cross. When the 50 crosses below the 200, which was right here on March 15th, that was your death cross. And you kind of see the market rallied here a little bit after it crossed, even though it crossed over, but came right back down, right? With resistance here, that trend line right there. It came down. And then ever since that, you know, it kind of market sold off, right? Because you're bearish as a death cross, right? It's going to play out with the market selling off. It's just how the algorithms are programmed. It's not people manually selling, right? You may think that the market, like Wall Street, is sitting there at their computers and they're hitting the buy button and the sell button, right? Like how we're doing it. No, it's not how it works. It's just supercomputers that are programmed to see stuff like this, and it sells. It follows the patterns and it's programmed like that to recognize the MAs and whatever the trend, and they sell off the market. They short the market and stuff like that. That's how it works. So now we're seeing that the 50-day moving average, it's looking like it wants to test this 100-day moving average. Now, if it crosses over, then that is bullish. But if it gets rejected and comes back down, the market's going to go lower. And that may be when the market actually makes a new low, if it makes a new low. But That's why you have to wait for the confirmation. There are two things that we're gonna have to wait for. One is CPI that's gonna come out in September. If it comes in low and if the rate hikes are working, this is gonna cross. It's eventually gonna push up and we're gonna cross the 100-day moving average, which is gonna be bullish. And then eventually, once that crosses over, it's gonna go towards the 200-day moving average, right? So we have to watch this to curl up and cross over. And then this 100-day moving average, you're gonna have to start to watch this to curl up as well and cross over the 200-day moving average. Now, if that happens, we are back above the 200-day moving average. And now the 200-day moving average is gonna act as support. When you're above it, it's gonna act as strong support. So we just have to wait and see what happens in September. But if inflation is still high and it's not coming down, then it's gonna get then we know the market's gonna sell off, and then most likely this is gonna start to curl back down. But as far as how it is right now, it's starting to curl up, which is really, really bullish. So it has to come up and kind of kiss that 100-day moving average and eventually cross it. Now we won't play calls when it's starting to kiss it or when it touches it. You have to play it when it crosses over it, because if you play it before it crosses over, right, as it's touching, then you risk that it gets rejected. So you have to wait for the confirmation for it to cross over. You can see right here exactly where the market bounced off of that 50-day moving average, right? Right here, it had really strong support right there at 390. If you remember when we came up to the 400, right, we sold off. And I don't know if you guys remember, I said SPY is going to test the 50-day moving average again. So when you cross over it, initial cross was right here. It's going to come up, it's going to come back down, and it's going to test that moving average again. And it tested it and it bounced off of it. So you can see here as well, we crossed over the 100-day moving average, right? It came up, it came right back down on it to test it again. So every time you cross, it's going to come back down to test it for support. And it tested for support and it bounced off of it and we went up. Now you can see here, right, we are below it. So the 100-day moving average is 405.50. We went below it on Friday with after hours. So the market closed at 405.31, about 20 cents down from where it is at. Not a big deal, but you can see they really try to sell it off in after hours again so that we close below that 100-day moving average. So that's not good. If we can, if the market can keep recovering and keep getting above, holding above this 100-day moving average, it's going to be really, really important for the market to get above it, because now you're testing it for the second time. So first test, second test. If that doesn't happen, it's going to test the 50-day moving average. So we know that if we go under 400, they're going to push to test 398.57, where the 50-day moving average is at. If it tests this and it holds, then we could look for this to hold and push back up, and we could take calls, but it has to hold. And when I say hold, not just come down and hit it and bounce back up, right? Because that could be a fake out. You want it to come down, test it, and make a green candle closing above it. If it comes underneath, we're not going to take puts right away. You have to have a candle that closes underneath it. Then you take puts, because that's how you trade. You trade when something when it closes underneath, it's bearish. If it closes above, when it tests that moving average, then you play calls to the upside. But it has to close. The candle has to close above it, just like you saw here, right? It tested it. Then you had, even though it's a red candle, it still closed above it, right? And then here, right, still closing above. And then, you have this gap up here with futures. This gap that you have here is from futures. When you see a gap like this, the market gapped up overnight. Just like here, market gap down overnight. And you have these gaps here in between. That's why when we say gaps to fill, we look for stuff like this. So you have a horizontal line there. And then you have a horizontal line there. So you have the gap in between here and here. That's what you mean. That's what they mean when you say gap to fill. Just like here, you have a gap to fill. I'll move this line. right here, and right there. You have a gap between the candle that needs to fill. So you'll say SPY needs to fill the gap from 399 down to 394. So that's how that's how I see it playing out for now. We just have to see what Monday looks like. Monday, you may have a gap down in futures, and you can have a gap down, a huge gap down. We could open up down, a percent, 1.5%, 2%, just because of what happened on Friday. Next thing you know, we are below 398, or we are at 398. So Monday is going to be. You may also have a day where it's going to be super volatile, where it comes down there and you just get a bounce off of it with huge volume or stuff like that, where it goes below and you just have you have a bloodbath again. So that's one of the. So you just have to wait. That's pretty much it. What we have to do is wait. I had a. Where is it at? So everything, you can look for trend lines in here that make sense, right? Even here, right? You could see if, okay, let's just say you were thinking of drawing a trend line. You're like, I don't know where to start, right? You're like, okay, let me kind of connect maybe something from here to here, right? Something like that, right? So if you connect kind of that right there, depends on how you want to play it. You can say, okay, look, there's, there's a triangle right here, right? And once it broke below here, right? You can see this triangle here, and, it just couldn't hold above. And you could take some puts right here. So does this trend line here make sense? In a way, it kind of does, because it's creating a pattern for you right there. It's creating a triangle, and it closes below it, and then you take puts right there, and then that's it right there. Let's delete again. And when you look at it, right, if you draw it right here, and then you remove this right here, so we'll remove that right there, right? Does anybody know what kind of pattern this is? All right, so if let's remove these. I'll just remove everything. Does anybody know?
I don't think they can see it.
They can't?
No, the lines are too thin for me, and for me anyways. Like the lines are very thin, and I've just seen your mouse moving barely too. So
Okay, let's see here.
you make it bigger or thicker or something.
Size. Can you see that?
Oh yeah.
Okay, so let's do it that thick, and make it white instead of blue. Right there.
Ascending wedge.
What was that?
Ascending wedge.
Right, exactly. So, and we all know that pattern is what? Is it bearish or bullish?
It should be bullish.
Right, but the thing is that when it's bullish, it has to trade all the way inside of the peak. So you see, we went early here. That's why you came back down. It has to go in here. If it does not go in here, it's not gonna go. It has to go inside of this peak right here to this point. If you go here or here or here, you're gonna come right back down. So it's one of those things you have to recognize, right? So you could have another one up here as well. I'm not gonna try and draw it perfectly, but you'll see what I'm saying. I'm just not comfortable right now to draw it, right? So you can see the same thing right there. When we came up here to 470s, right? You're just not trading towards the peak. and you're gonna come right back down. Right.
Haven't seen before, or tracks that have not been seen in years.
But yeah, if you guys want to jump on, I think that's all I have for today. I'm just gonna try to keep the video not as short as possible because it's too big when you have to upload it to YouTube. It's too long for most people to watch a 2-hour video.
So not a small.
Live trading, I'll be live trading. Maybe I'll try next week, but if not next week, it's the following week. I'll be live trading. So get ready for some live early morning trading again.
But that
Anybody
first,
wants?
the first ascending triangle they got there, right? The one that you just drew. It went early and it came right down,
Yep.
right? Yeah.
Yep.
So,
Exactly.
And this one is already on the way down, right? The second one.
Yep. Mm-hmm.
Okay.
Already the way down. So the market, it can make a new low. You know, you just dropped $15 in one day. What if we drop $15 this upcoming week? Now we're gonna be at what? About 385 or something like that, right?
Back in the 380s.
Exactly. Exactly.
Remember-
You're gonna be back.
Yeah,
in the
remember
380s.
back when it was cascading down back, started going down in what, January, right? February, March, April. We were talking, we drew a trend line, and I think it was like 380 something. It never got quite there, right?
Right, exactly.
So maybe they want to take it back down
Yep.
quite a ways down now.
Well, yeah, you know, and it's because of Powell, right? And what he said at the last meeting, you know, like, oh, everything's good, you know, the market rallied, right? The market just went crazy. Because we remember, I don't know if you remember, we had the puts down into 373. We had the 350 puts that were expiring a month out, I believe.
Yeah.
I don't remember if you guys remember. We had the 350 puts, right? And the market went what? The market went up, and then, you know, we had to transition and switch to, you know, to the call side, right? But you know, it's what he said. You know, he wasn't acknowledging everything and, like, you know, lollygagging like he always does, instead of saying, hey, you know, we got to get inflation under control. We're going to do this and we're going to do that. Now he said yesterday you're still going to continue to
Well,
raise.
basically, from what I gathered on the news is that he's just saying what he's been always saying, but this time he put it over. The way he interpreted it is like, we've got to maintain the quantity tightening. Then he's got to maintain the tightening, because if he doesn't do the tightening, then we're going to be into really higher interest rates, right? So I guess everybody said, okay, well, since he wants it tight.
He's always been saying it, though. That's the thing, you know, but this time he said, last meeting he said, you know, the Fed is at neutral. They were at neutral and their target was neutral, right?
Okay.
Neutral is what, we're at what now, 2.5, right?
Yeah.
Their target is neutral, which is 2.5. So last meeting he said that the Fed is at neutral, and that's what their goal is, to be at neutral. So the market rallied on neutral because he said, you know, that's what the goal is, to be at neutral. Now this meeting he said, if they're going to continue to raise rates sharply, that's what he said. So he completely changed what he had said from last meeting, and that's why you see this huge sell-off.
Yeah, but I don't think so. To me, I heard it differently. Yeah, to me, he was always saying, okay, he said neutral, yeah. And once the prices keep down, inflation keeps coming down, he wouldn't have that tendency to raise rates any higher, right?
Right.
But I don't know what he saw, but then all of a sudden, like, what happened Friday is that it's almost the same thing, but maybe he thought that prices are still going up or something. I don't know.
Well, that's why he says he's data dependent, right? He's going to wait for the data to come out, right? So he's going to wait for the data to come out on
So,
guess
okay,
so.
what came out on Friday morning was consumer spending, right?
Right.
So what, if spending goes up, that means what? The inflation continues?
Yes, if consumer spending stays up, inflation continues. And if there's if unemployment is not, if it doesn't increase, right, then inflation continues. So they want to see unemployment go up. Unemployment needs to go up because if people are employed, what are they gonna do? They're gonna
They're
spend
gonna
money.
spend. Yeah,
Inflation is gonna stay up. So he wants to see that down as well.
so
I mean,
I, I really don't understand this. This is really a dismal sign. If I'm having fun, I'm getting employed and I'm making money and I'm buying goods, that's bad for business.
you're right. So that's why at some point it has to be priced in. They can't, it has to be priced in at some point. But then he said their goal is to get inflation down to 2%. So if, inflation is entrenched is the word they use, entrenched. Their goal is 2%. They're gonna have to keep rates up for a very, very long time. And that's gonna pretty much stop the economy from growing. So it's not
Well,
easy.
which is what they want, right? They want to stop the economy from growing because they want to keep they want to keep your spending down.
Right,
They want you to be unemployed
right, exactly.
or just hold on to your money. I don't know which one. What do you want me to do? Don't spend. Don't buy anything. Keep it down. Let them remove the demand and let it be let the sellers drop their prices or something.
Yeah, so it's a tricky, it's just a tricky situation, right? It's not you know, it's not gonna be an easy fix. So for them to fix it. So that's why, we just gotta you can only hope that inflation comes down. If you're hoping for the market to crash, I don't know. Maybe you can hope for it to crash so you can buy some houses or some investment. You're like, damn, but at the same time, you're also hoping for the demise of other people that have these assets and stuff. So, yeah, but you don't control what it does. So I guess we just have to wait and see what it does. If it crashes, you're probably going to come all the way down to 300, maybe down here, all the way down here to 315, it'll be all the way down here. That pre-pandemic level. Yes, right down here at 310, maybe down there. I like calling for 330 for the market at the bottom, but we came down here to 362. You had support there at 362, so it is the market bounced there because why? There was support there. If you look across, you had support here, so it bounced at a level where there is support. And if you extend this line here. All right, so we extend this all the way down. You can see you have a channel there. Now what happens is that when we touch down in this area with this horizontal line here and this line coming down here, right, what pattern is that? Now we'll draw it again. Now you can see we're back here. We touch this again. Does anybody know what pattern with this line connecting here and then this horizontal? What pattern is that?
Which one do you want to put?
All right, I could remove this. So what pattern is that? With this one right here. Let's remove this. Let's just remove all these.
All the triangles here.
Descending triangle.
Right. So it's a descending triangle. What do we know about descending triangles?
It can go either way.
Well, not really.
Pointing down.
You can do what?
I said it down, pointing down, descending.
So remember, your ascending triangle is going to be bearish, right? Because you're coming up to a peak, right? Your ascending triangle is bearish.
Okay.
Right?
The descending could be bullish.
Your descent is bullish, exactly. So that's why you had a descending triangle right here, and that's where the market bounced. And it bounced over, but it went early, exactly. So it's the same thing as the ascending triangle. It goes early, it's going to come right back down. The descending triangle, you break out to the upside early, it's gonna come right back down. That's why you see we're coming back down. And it so happens to be, it's almost like the market knows these things ahead of time, right? Or, you know, they make these patterns ahead of time. You can see, right, it played out to where it actually happened, where Powell speaks. It's almost like they're already written the script. It happens exactly as he speaks, and now we're gonna probably come down and touch this line and come right back down in here. And you may come down and touch that support here, and then now you trade sideways in here. Eventually, you may come towards the peak here, and then eventually the market bounces for real that time. It could be like that. So
What date is the end of that peak?
you're talking about December, January, so beginning of the year.
Yeah.
The market,
Oh, yeah.
the market normally rallies in December, January, and around there, right? That's always a bullish time for the market.
They say
Banner run.
October through the January, basically the start of January.
Mm-hmm. Yep. Start of January, you know, market is history shows it's always bullish around it. So that it could play out like that, or you know, it could bounce here. Maybe we don't come under, and you know, it bounces here, and then just kind of do a curl, and then eventually go like that. But that's what I was saying. I think September is going to be the most important
Yeah.
CPI. September is going to be the most important one.
Mm.
Yeah, that's what I think. I don't know if there's one in October, because if September comes in low, they can raise by 50 basis points, which is not bad for the market, because they're saying how they made it sound in the meeting is that 75 is likely what they're going to do. But then the guy from Atlanta that's always been hawkish and saying, oh, we got to do 100 basis points. He said yesterday that he's thinking between 50 and 75, but he's more leaning towards 50. But last month he was saying 100. So I'm like, dude, where you like, you're just like, you know, lollygagging and going back and forth. Like, make up your mind. So if you get 50 and the market was expecting 75, you're gonna get a rally. So you may, you know, we may trade sideways at this 400 to 405 area for the next 2 weeks, which leads us right to September 13th, which is going to be the next CPI. So you can see that that's going to line up to about right here. So we could trade literally right here, you know, which is 399. So you may get a chop right around here, 400, 405, and you stay right here until that data comes out. And if that data comes out significantly lower, then you're going to rally off of here, right? And then what happens is that these EMAs are going to start to cross, and then that's how the market goes, you know, potentially higher. But if it comes in and you're trading here, then you're like going to come all the way back down here and then come test this support here. So
That's a major support. Is what number you at?
major support.
The flat, yeah, horizontal line.
As far as horizontal line, the major support that we have is this one right here at 390.
No.
Oh, here?
Yeah, the big guy.
Oh, that was the bottom, the 360.
Yeah, the 360. Okay. Fine.
Yeah, if that breaks, then your 401k, I mean, they're already messed up and all kinds of jacked up. But if that breaks, yeah, people that are retiring are
No,
gonna
I just wanted to get that number straight, because for me that's where it bottomed. There was still like room to go before it turned around down there, right?
Yeah, and that's what I was saying. You know, when Powell speak, we had this 373, right? And he spoke during this time around here, and he gave the market reassurance instead of actually telling the truth. And that's why we rallied from 370 when we should not have rallied. We should have actually made, you know, new lows, right? Because
Exactly.
you know, he just, you know, he was just he had his knee pads. But
Yeah, but like if you like zoom back in a little bit, just scroll back in. No, I'm sorry, the other opposite direction.
zoom
Right.
out.
Yeah, zoom out a little bit. Okay, you see now, if you on the left side of that, there, Now, if you
Mhm.
bring that down to that peak, that is where I was expecting the bounce. Eh?
We're here.
No, on a little further left, the other peak,
Near the peak.
left.
Keep going.
Left, yep, keep going. Cross that that one.
Right here.
That high is where I was expecting the low, right?
Yeah, 330, pretty much.
Yeah,
Yep, 330.
pre-COVID. I was thinking we'd have hit the top of pre-COVID.
Right, yeah, exactly. That's what, that's why I had puts as well, because, okay, there's, eating was coming up. There is no, there was nothing good. There was no reason market should have bounced here at 360. We should have went down, made new lows.
Exactly, another $30.
At least another $30, exactly. Down to this level here, right? But, he reassured the market, and the market rallied from 75 basis points because they were not because if you remember, they were saying a full point, right? If you remember.
Yeah,
But they went ahead and did 75.75.
and then the market rallied, yeah.
And the market rallied from that because,
From there.
right,
Yeah.
exactly. Now they're saying 75 again. But now the guy that was saying 1 back then, he's saying 50 now. The guy from Atlanta, the Fed president from Atlanta. Right. So, we just have to wait till the next CPI. I think it's going to come in lower. I personally think it's going to come in lower.
Well, that's what I'm thinking, because if goods are coming back online and everything is starting to, to me, the natural progression is once you get in the goods and everything else and production is back up, if the deflation will happen. You know? Deflation will happen because goods will be available. People are going to say, okay, the prices are going to come down because guys have too much supply, right?
Right.
Which is counter to what these guys are saying. You see, these guys are saying, oh, you need to not hire people, and you need the opposite to happen to beat inflation. And I'm thinking, I don't know, I'm no scholar, but at the same time, it doesn't make sense,
So that's why this area right here, that's why I think we're gonna trade at this area right here for a while until that comes out, right? This 100 area, because if you look, this is why you have to analyze all patterns and look at all scenarios, right? If you look, right, you could say, this could turn into a cup, right? You could start to have a curl right here, right? If you look that U shape up, right? This right here could turn into an extended handle. If you look at what I'm doing, right? So this line here, and then this peak right here, just draw horizontal coming across, right? You don't want to make it like this. It doesn't make sense, right? Just follow it down like that, make it like that. So it's symmetrical with this. That's how you draw your trend lines. Make sure they're symmetrical. Don't have something like this, something looking like this, right? So we have that peak right there. We're gonna make it symmetrical. So what we do, you could trade here. You see that curl here. This could potentially be a handle. So if everything is good and inflation comes down, the Fed is like, oh yeah, we're going to do 150 in September because inflation came down. We're happy with the numbers and we're going to stop for a while. The market's going to go crazy, and then you could turn this into a cup and handle, and then next thing you know, we're up here touching 450, right? So that can also play out as well. So I think we're going to stay. Monday will let us know, but I think we're going to stay around 400. 404, 405 for at least 2 weeks. Kind of like how we chopped around 413, 410 for 2 weeks. They went up to 3.
It's not gonna play well for my experiments that I was doing. Burnt it all to crisp.
For us that have the 930s, if the market rallies from the 13th, if there's good news, we still have a chance of those calls. They could still go profitable. If you take a look, you could pull up your options profit calculator. You could put in your cost basis, and you can see what the market needs to go to by September 30th for it to be profitable. So if you rally back up to, you average back up to 420, 425 by September 30th, you're going to be making money. So
And if it doesn't, cut losses.
it doesn't, yeah, we just have to transition to something else if it doesn't, right? We transition to puts. So even though we're holding it, you can still make your money back or more. If it plays out that way. Your head and shoulder. A lot of times too, when you look at your head and shoulders, the neckline, something I want to point out, it doesn't have to be completely flat. I forgot to tell you guys that it doesn't have to be horizontal across, right? It could be like, I'll draw it. It could be like that, right? It doesn't have to be straight across. So your your neckline can be like this. Right, so you connect this right here, connect this, and you can see once it broke here, that for pretty much 412, market was done. So we can have this line on our chart going forward. So that line is going to be important because if I extend it all the way over here as well, all right, you have that that kind of peak, right? Everything lines up once you start to draw them, right? And now if we zoom out a little bit, right, you can see what do we have here, right? You had a symmetrical triangle right here. And this one actually came in the peak, as you can see right here, right? Came right exactly in the peak, and you had that balance there from 408 to 430, which is good enough, but at the bigger picture, you have to look at the bigger pictures with the triangle. This one, it's not, you could draw another one from up here, right? You'll see. So let's extend it here. All right, so we're gonna extend that right there. Right, so you had this one that broke out because it came to the peak. You can see right here in this very peak, you had a rally from here, 407 to 430, which is big enough. You love that, right? Because it's a $20 move. You make a lot of money with that. Now, there's always going to be a bigger. You're going to have a mini one, then you're always going to have a bigger one. The bigger one is this one right here. That is the bigger one right there, right? And you can see the bigger one, we just did not go over here. So the market needed to consolidate around here. But as I said, everything is like it's scripted already for Wayne Powell to speak. So that way you try to go early, and then it came back down, and then Powell decides to speak, and then it plays out like that. So this will need to come down. This is what I'm saying. We could come down, form a cup, then curl back up. And once we curl back up, you curl back up into this triangle here. So if we come down, and we curl into here, we know that the next time the market breaks out in this area here, we are going to go above 430. It is going to be a rally that goes above 430. So, and then that channel right there, what channel is that? Can somebody explain? So you see how everything kind of connects when you start to draw it, right? Now you have a completely symmetrical channel. So can somebody explain that channel? What kind of channel do you think it is? Why is that channel important? Where's Evan at?
I'm here. Can you hear me?
Yeah, can you explain that channel? I don't
I'm
need to.
driving, so
Oh.
I cannot pull it up at the moment.
Oh, my bad.
You're good.
So that channel right there, right? That is either your downtrend channel or your uptrend channel. So if we are trading down like this, right, that is your downtrend channel. So what the market is trying to do is trying to go back into an uptrend. If it does not cross here and it comes down here, you are still in a downtrend. So you can see we're still in a downtrend every time we are below this line right here. The market is still in a downtrend. You see it came out of here, and this is where, you know, you take your calls and stuff. Once you see a candle closes in the channel here, you take your calls, and it's gonna go ahead and test to go back into an uptrend, and it gets rejected. And once it goes back underneath, you just load some puts, and you can see every time it tries to come back up, it gets rejected. And what happens if you have long-term puts like around this area here, and it comes down here and you haven't taken profit, right? And it comes back up, and you're like, okay, I'm breaking even now, and gets rejected again. You just add to your position, and it comes down and it gets rejected again. You just keep adding to your position because it's getting rejected. And, you know, eventually you make a lot of profit because you keep adding to your position. But it have to be long-term. You cannot play 2 weeks here or weekly, right? Because this right here is a lot of time in between. So if they're like a month, 6 weeks out, you keep adding to your position, and then eventually, you know, you average your position, and it goes all the way down. So this was the first test of the uptrend channel, right? So you had a first test, failed. Second test, failed. So we are back down here, and we may come back down here we may bounce here, right? So it's 402 is going to be important on Monday. If we open below 402, then it's going to be bad, but 402 is going to be important coming Monday. So we're going to test this channel again. So, you know, if you bounce here, then it's going to be good, and then it's going to go for a third try. But at the same time, right, if you look, what we're going to say, you know, with this, right, what are you seeing here? What am I going to say next? If you look out, what is the market making in this kind of sense when you look at it? So you had one peak here, rejected. You have another one here. What happens if you test here and you make another one? What would that be called?
Third test, but what was the first peak? What time frame? Yeah.
Daily. So this is a daily.
No,
I mean,
I'm talking about what the date.
The date. So 31st, roughly,
31st
of March.
31st of March, and then the second peak.
The second one is what we just witnessed Friday, 8/19. I mean 8/20.
March, April,
I mean 8/19.
April, May, June, July, August. That's 5 months.
5 months.
So if another peak happens in another 5 months, that would put us in what? September, October, November, December, back into January.
So January is the most important month, pretty much.
Yeah,
for the
but
market.
then it would be a low. Then that, even though it would touch the top end of the channel, would still be lower though.
Right. So what is that telling you? That's why. So you're on to something. So that's what I'm saying. This is the first peak. What do we call this? Then we call this, and then what's the third peak going to be called? So
Lower low.
Lower low, exactly.
Lower highs, sorry.
Right. No, lower lows. Right. So this
Lower highs.
higher low is when you're bullish. Higher low is when you are coming up and you make a first low, then a higher low is above that first low, then going up, right?
Yeah.
Right. So what is this? You have your first low
Lower
here.
highs, sorry.
Right.
Lower highs.
Exactly. So lower highs is very, very big.
Yeah.
Market, you want the market to make higher lows, right? So you have this here and then this low. So the market may make another low here. And then it may make another one down here. And
You
then
never know.
exactly. So it could trade all the way in this channel here. So, you know, we could come down here, right? We can go again and touch here. Gonna be keep making lower lows. And it could follow this channel all the way down until it eventually breaks here.
What happens if it's lower highs and higher lows at the same time?
Well, that's why it's gonna be, you know, data dependent, right? It's gonna be, we're just gonna have to wait and see what, you know, how it plays out. So it, at the end of the day, it's gonna be, we just have to wait pretty much. So all we can do is wait and play what we see in front of us. So,
So if we're having a call, like say for January 23, and we're at the top of that shoulder there, the top part of the shoulders on the head in January, right? Last January, right? So they're looking at the right there, the top of that, the height,
yeah, up here, yeah, the head and shoulder.
yeah,
Yeah.
right, the top of the shoulders. You have a line there already, right?
Yeah.
That guy, right. Now, that price, if you were to put a call for there, you're not gonna make it, basically.
Oh, right. Yeah. You're not going to.
Yeah, might as well just go. Kiss that coinage goodbye from now. Yeah.
So
Yep.
that's why the market, did I cut somebody off? Sorry. That's why the market could come down and test this low. It could do that as well. Because if you look, the channel is pointing to the market testing this low again, because it touches the uptrend and gets rejected, and it could touch it again after we come down here, right? It could touch it again, or we could come all the way down underneath and then trade back up and go here again, and then eventually goes down and then down, and then they were saying, a lot of people are saying 2023 is going to be worse than 22. They're saying 2023 is going to be the recession. So I mean, if you look at it, it could play out that way. If we trade all the way down here into the channel and then eventually you break here, that's going to be 2023. And then boom, you're all the way down here. I don't know how it's going to be, but I can only, look at the channel, and we could play the chart, the patterns, and, if it goes that way, then you may look at it as an opportunity. If you got some cash saved up, you're like, well, I'm going to go all in for some long-term calls, or, if you already have a bunch of money in, stocks and whatever it is, you're going to feel some pain, as Jerome Powell said, in your portfolio. So you can weather the storm out, down. I personally don't hold stocks. I've told you guys that before. I do not hold a single stock in a portfolio. Everything that I do is completely day trading. I don't hold shares or anything like that. Nothing. There's nothing in my portfolio. I removed that. Day trading is risky, but I removed that that risk. Plus, you need buying power when you day trade. That's another thing. Anything you hold overnight is going to take buying power away. So, if there's something that you want, if you want to trade and you're holding a position overnight, your buying power is going to be gone the next day. That's how I explained to you guys. That's how short sellers always win when you have these meme stocks that go crazy, right? Because if you're holding that meme stock overnight, what 99% of retailers are doing, because they're holding and think, oh, the squeeze is going to happen. When you wake up in the morning, you take profit, or everybody takes profit, or the smart ones take profit, but the ones that still believe in the squeeze, the hedge funds, that don't take profit, are going to feel it. Because you cannot keep buying, because your buying power is gone overnight. When you sell, it does not come back intraday. You have to wait again the next day. So shorts, they're just going to keep smacking that stock down, because buyers can't keep buying. That's why shorts win over time, because the next day the stock is already down so much and it's breaking all support levels. By the time you try to buy it, there's a bunch of short sellers have their stop losses with thousands and thousands of shares blocking it. So you cannot continue the momentum after that. So that's how they always win. 99% of the time, they always end up winning when they're short. All right. So I have any questions?
Yeah, let's hear about your SPX play.
Which one?
Didn't you? What was this, last week? Is that the one you did the 600?
600%? Yeah.
Yeah, I think it was like a big percent. It was a giant win, wasn't it?
Yeah, it was 600%, and then one of them was 700.
Damn.
I held one to 500%, but the other one I got out. I think it was 150%, and then it
Still good. Still good.
why can't I pull SPX up?
You can't have it on a Webull desktop, only on mobile.
Oh wow, did not know that, but okay. But yeah, SPX. I think when I played it, I could use Spy. It was let's go to the 5 minute. I think it was what day
Did that
was
one
it?
retire you?
Not really. Not
Was
really.
it a lotto? Was it a lotto?
Yeah,
Or
it
was
was.
it like a regular day?
Yeah, it was a lotto.
Yeah, the lottos are a little cheaper, I think, too. So.
Yeah, it was. It cost. Was it 45 cents? That's the thing with SPX. You know, if you want to risk $45, you can risk it. It could turn into $600. If your account is small, like you have $1,000 account, $45 risk with one contract is not something that's going to destroy your $1,000 account. You may make $600 on it. You may lose it $45. So it's a great risk to reward ratio. You can even buy two of them with $1,000 account, and you're like, okay, I'm going to lose $100. And it could turn, you saw how SPX went on Friday. You had contracts going from 30 cents to 55. So imagine buying something, the puts, imagine buying something for 30 cents, for $30, and you're selling it back in about 8 hours for $5,500. Where else can you do that? If you had put $100 in there, you're walking away with 20 grand with 4 contracts. So that's the beauty of lottos, right? You can risk $100, you can make $20,000 with it. You can risk $1,000, you make $200,000 with it. So, it's one of those where, but here's the thing with lottos again. If you do that, right, you buy $1,000 worth, and it could potentially make it 200,000. What happens when you're up $5,000? You're gonna say, "Oh, I'm gonna take my profit." What happens when you're, 200% on it? You're gonna take your profit, right? So a lot of times, if you're risking that kind of money, because you're like, "Well, I'm gonna risk that 1,000." It's better to just walk away from your screen and say, "You know what? If I lose this $1,000, I lose it." And it can make you 200,000 if you had $1,000 in SPX puts on Friday. You're walking away with over $100,000, but depending on which one you bought. If you bought the 410s, they went from 35 cents to the 4100s. I mean, they went from 35 cents to 55. That is just crazy. So, it's one of those where you just risk $1,000. It's kind of like the Google play I had when I first started Discord. It was a very, very, it was like a month after starting Discord. Was it?
It wasn't very long after starting, maybe 2 months, but it didn't take long.
Yeah, that was just something else. That one went from what, $1 to 66.
Yeah, we woke up in the morning and it was at like 25 or something. And then throughout the day, it went all the way to 66, 70.
Yeah. So, you buy it for $100 and you sell it back for $7,000 over the next day, overnight, pretty much. That was something else. That was the greatest trade I ever made. That was just insane. And then I had Facebook as well, because Facebook went up the same day. So we had Google went 6,000%, then we had Facebook went 4,000%. I had quite a bit of contracts, so it was quite.
I remember it pulled in a few hundred, I think. Or was it like 400?
It was like 700.
700. Yeah, it was insane.
Yeah. You wake up to $700,000 trade. So
I'm wondering, I'm wondering if I have enough patience to just wait for plays like that.
Yeah,
I
me
mean,
too.
and that's the thing, that those are lottos, right? You put $100 in it, and $1,000, you're like, well, if your account's 100,000, you put $1,000 in a lotto, you lose it. Is it going to do any damage?
No, really.
Not really. You have $100,000.
If you're 100,000, if you have 100,000, sure. Well, that's why 1,000 is not much. That's like 1%.
Exactly, 1%.
That's the thing. It's like a numbers game, right? Overall,
Mhm.
And you got a stop loss too,
right? So 4 out of every 5 trades go green, and that's including the lottos. So
Yeah.
say you have a $5,000 account. If you tie up 1,000 in one play, 1,000 in another, 1,000 in another, and you shouldn't max out your account. You guys are going to do it anyway. We'll say don't. I've done it, even though I say don't. But anyways, you take 5 plays, there's a 82% chance that one of them loses and 4 of them go green. And I was doing the numbers, it was about a 57% chance that they go over 50%, and then like a 36% chance that they go over 100%
Right.
from zeros alerts. So just think about it numbers wise. Don't go all in on one contract, because then you just screwed your chances of whatever you had. But if you take 5, it's a pretty good opportunity to make some good money. 5 different plays.
Yeah, but even with the plays, especially now in these uncertain times, and I'm thinking of now I could be wrong, so you guys chime in if I'm wrong. If I'm taking 3 plays, three contracts per play,
Mhm.
right? I want to do 2 calls, and instead of a stop loss, I'd rather do a put. And where I should be adding like a 3rd contract or a 4th contract, kill the put it on the play on the call side.
Yeah.
Follow? Like so,
Yeah, so-
because in
hedge.
options, there's no stop loss really. Yeah, my software doesn't have like a stop loss, right? So you got to make mental notes and be there to watch it, right?
Right. Yeah.
So put at the stop loss.
Yeah.
Or hedge it SPX.
Yeah, SPX, exactly. The only way, SPX, that is a good strategy for people with smaller accounts, right? If you want to you could literally grow your account insanely with SPX, because a lot of those are cheap. So if you wake up in the morning, as soon as the market opens, you find a cheap one and you put $100, you put 50 in a put, and you put 50 in a call, and this thing goes crazy. You lose 50 on one, on that side goes 1,000%. Now your account, you literally just,
Could you guys look into that?
crazy.
Could you guys look into that? I would man get up in the morning and say, "Well, I'm going to spend $1 today."
Yeah, you can literally do
10
that with
cents.
SPX, right?
I'm gone for the day. See you in the morning.
$100 risk, 50 in a put, 50 in a call. Because think about the one that I sent out. You just hold it all the way, right? It was $45 for the contract, and the contract went to like 600 or so, somewhere,
100%, something like that. Yeah.
right? So if you had put, it was a call, you put 50 in the put, you put 50 in the call. The call side just made you $600, and then you lost 50 from the put. So your net gain is what, 550, roughly. So your risk was $100. You made 550. That is a great risk to reward ratio, even if your account is $1,000, because you're only risking $100 from your $1,000 account, which is what, 10%, and that is the recommended when you play ratio. 10% of your account, no more than 10% is a recommended ratio. So there you go. If you do lottos, though,
that much for the lotto.
What was that?
Yeah, but not every day. As the spot, you see, it's when the big momentum days. It's like when Powell spoke. I should have jumped in a put like immediately, even it's in the money put. I would have been.
Yep, exactly.
Retired today. Re-retired, I should say.
That's what we should have done. That was my mistake. We should have hedged literally that much. 6:30,
Mhm.
you know, a 420 call, a 415 put or something like that.
Yeah,
And hedge,
413 even.
you'd have made so much money on one side that the loss on the next side is literally nothing.
Yeah.
That's
Well,
what,
that's a good thing to have in mind and bear in mind instead of getting all frustrated and going paralyzed, brain dead for a few minutes.
Yep.
Instead of cussing, let's just try to make some money.
exactly.
Yeah,
So-
yeah.
It's kind of like the question, something out like that. You guys could, if I forget, you just be like, hey, you know, Zero, what about a hedge? Since he's about to speak or something like that. Because sometimes I'll forget to, you know, I'll say, you know, stuff happens and stuff like that.
Yeah, well, that's it. You know, when the bias takes over, right? When the bias say, we're going to hit that 420 mark today for sure.
Mm.
Yeah,
Yeah.
and Powell is going to pump, you were saying. He's going to pump the market. No, he didn't. He deflated it. He sucked the air right out of
All the other times he did, and then, you know, just so happens that he's, oh, you know,
it. Yeah. All right, so that's something we should consider going forward.
yeah, exactly.
You know, how to maximize our gains there, especially
Yeah.
with but it only happens, I notice this when like $50 moves and up, right? Like if the futures $50 to $80, like it's like 200 almost down, on something down on
Mhm.
Friday alone, right?
Yeah,
Yeah, but on those big move days, on those big momentum days, be it up or down, we should be doing fine.
right, exactly.
Yeah. Well, I think we should do on Monday. I'm just guessing right now, but I would think the selling continues.
Yeah, that's what I'm thinking too. You know,
But
I'm
at
just,
some point, there's going to be value, and people are going to start buying.
yeah, it's like, it's gonna be bad, man. If we come down here and test this 360, and boy, my brother, he went to this lady's house. Or my stepdad, they were doing some work, electrician work. And he said the lady was an older lady, and you know, the rich lady had money. He said, man, she was in there cursing. He said she was cursing and she was cursing and cursing. He said she was so pissed. Why? Because she looked at her portfolio and her retirement, and that thing was red. He
Shit.
said she was so mad. He said older lady too. He said, man, you know, if the amount of bad words that she was cursing, he's like, he said he was just laughing in his mind. But, you know, out of retirement, just if this happens, you know, if you invest in 401ks or whatever it is in the past 2 years, you're going to feel some pain. You're losing money.
Yep.
Can't average, huh? You can't average your 401k.
You can only put more money in there. So, you know.
Yeah,
So
but
that's-
Zero, with I see your recording is still on, but what I'm saying though is like when you go to the thing, maybe you can edit this video just for the first 40, 50 minutes, whatever it is, the meat of it, and
Yeah,
edit it to that, and this rest here we could just, you know,
right.
this even this conversation is good, but you know, people don't want to sit and listen to all this, right?
Right, exactly. They don't want to listen to us old people.
Running our thesis.
I was gonna say you can't do it in parts where you do like one, let's say you record like 10, 20 minutes and then stop and then record another 10, 20 minutes.
Yeah, part 1,
Like
part 2,
parts.
part 3, yeah.
Make it easier.
Make them 15, 20 minutes long.
That's
Yeah.
what I see. That's
For-
why.
Well, like, you know what I mean? You stop it and then re-record. So it's like in parts.
Right, exactly. That's why I need you guys, man.
See, ideas, man. Yeah, man, we need each other. I was
Yeah, I
gonna
need you
say,
guys to call me.
well, send me a DM me your phone number and I'll text you when zero. Most I can do is copy paste and send a text to you. Calling you, I don't want to have to leave.
Well,
a message.
Discord lets us call each other. I think they have like a right by your?
No, it doesn't ring. It doesn't, it
Oh, it
lets
doesn't
you
work?
call, but you gotta coordinate the call, right? Like,
Something
I
like
can,
that.
I can go on a call in Discord right now, but I have to
Yeah.
invite you to join the call, right?
Oh,
And,
okay.
and
Right.
if it's all in Discord, it would useless to you. But if you give me your phone number,
Yeah,
you
yeah,
know,
I'll put the number out there.
put your phone number out there and say, but so Zero puts out at least
Yeah,
you get a
yeah.
ding on your phone, bing, or something. So,
Well, I was gonna say, yeah, if you call me, the ringing will go off. You know, I mean, if you want to just let it ring a couple times and then hang up, you know, it doesn't. I'll wake up, you know, and I'll jump on it because it's like my problem is I'll wake up in the morning. I'll be up at 6:37, and then you know I'm decaying just as long. I'm going, you know what I mean. My theta and decay is going off too as well with the contracts. So it's like, you know, I rather wake up and be ready to trade and be all in than